Hey guys, what's up? From an insane wicked finger candle on Bitcoin to Solana now being embroiled in a legal controversy with respect to pump fund, and Coinbase announcing introduction of equity perpetuals, a lot of interesting news stories have come up in the world of crypto in the last 24 hours. So we're going to cover many of them, and we're going to see some of those implications. And finally, I also saw this very interesting tweet by Bitwise, where they outlined their 2026 outlook, which is kind of interesting. But I thought it was worth sharing my commentary. Of course, we have a roundup of all of the venture funding in crypto in 2025. So we're going to look at those trends and see if it gives us some insights into which sectors should we prepare ourselves and position early for into 2026, and if at all 2026 is a year where we'll see a resurgence in crypto prices, or is it going to be a bear market like a lot of people are talking about. So first up, guys, very quickly, an insane, as Heji put it, this is insane. Coinbase is launching equity perps, enabling 24/7 trading of stocks, exchange traded funds, ETFs, and indices, and the product is set to launch early 2026 to both US and international users. Now, this is nothing new. We've seen the arrival of tokenized equity on Solana months ago, and in fact, a lot of trading has already happened, like millions and millions of dollars of trading has been happening on many of those stocks. I covered that in my previous video as well. But it will be interesting now that Coinbase has decided to introduce equity perpetuals. It basically is going to create a lot of competition, especially for incumbent perp players like Hyperliquid or Lighter, which operate on Ethereum. And suddenly you have Coinbase, which has this market-wide distribution, which has access to millions of users, and them now taking this position is definitely going to give a challenge to the likes of Hyperliquid, Aster, and others. So this is a very interesting news. Not everybody is, of course, happy with this, but this was another tweet by Good, and he tweeted that watching the last days of presentations from Coinbase and Robinhood feels like a turning point for fintech. And he says that Coinbase is becoming an everything app, right? You can trade stocks, you can trade crypto, you can participate in prediction markets, and tokenized. You can have access to tokenized, assets on chain on the Coinbase app. And similarly, Robinhood is moving the other way, right? They already had their TradFi presence. You could trade stocks, you could buy, leverage trading, you could do options, many things on Robinhood app, and now they've introduced perpetual exchanges. With their partnership with prediction markets, they're building their own L2 on Ethereum to bring tokenized equities on chain. So while Coinbase is moving the other way, right, trying to bring the TradFi world onto their app, Robinhood is going on the opposite direction, trying to integrate more and more of crypto. So both, though, he argues they are converging on the same idea, one single interface for every market that people care about. And this has been one of the central themes that a lot of people have been discussing in crypto, that you're going to see a resurgence of the neo banking or the crypto super app, right? This one application, this front end, which is where people will interact with financial assets, which will be tokenized, which will be available and tradable on blockchains, but will be available through a simplified interface. So you don't have to really go anywhere, and this is going to be your one-stop shop. Not everybody is happy with this announcement, of course. Elio Trades, who's one of the most prolific traders in the space, he tweeted out that Coinbase's big announcement is that you can trade stocks. This is literally the opposite of what we signed up for, because remember, when we got into this industry, the idea was that tokens are a better way to show utility, to raise capital, to trade and participate from the ground up, right? And now you're having these companies which are trying to create these derivative versions of equities in the real world. And what this is going to do is it's kind of creating this divide where crypto native companies, where the expectation was that they were going to push crypto native solutions, are essentially going the other way and doing all they can to integrate more and more of TradFi. My personal opinion is, and this is the reality of the market, because you don't trade the market that you want, you trade the market that you get. And the market today that we're getting is that we have to think about who the marginal buyer is. And believe it or not, guys, the marginal buyer today are institutions, it's the Wall Street, it is these DATS, digital asset treasury companies, and all of them are targeting the Wall Street investor. They're targeting retail investors who invest in equities, they're targeting institutional investors who like to build positions in regulated assets, and they believe using blockchain allows them to reduce cost, right? And so while I understand his criticism and his concern, but I think this is where we're going. And I was looking at this chart which kind of shows the main chart here is the price of Coinbase. Its token is listed on Nasdaq, and you can see from the lows of the last bear market in 22, the coin equity was trading at about $30, and it's currently trading at 250. So that's an 8x if you would have held it from late 22 or early 2023 all the way to end of 2025. So in 3 years you would have made like a good return on your money. And on the same time, on the same duration, if you look at the Robinhood chart, I mean, this one went absolutely ballistic. It went from $16 on the same time when Coinbase was trading at double its price. And then it had this crazy rally, taking it to $800 at the cycle peak in late September. And that's almost a 30 to 40x rise. Even with this correction, it is currently trading at about 380, which is still a good 30x from where we are. So Robinhood has clearly outperformed, and this is probably why Coinbase now wants to signal that they want to compete with them head on and build a super app in the way that Robinhood has successfully did, and tap into some of the market share that Hood was able to generate for itself, right? So this is probably where we are. In other news, guys. Bitwise, which is one of the largest ETF issuers and index fund for crypto and digital assets, they basically released their 10 predictions, crypto predictions for 2026. And without boring you with the details, it's basically, it's basically, I actually created a tweet about it, and it basically centers around this idea that everything is going to be driven by institutions, right? That the TLDR is that institutions are all that matter now, and that cypherpunk is dead. Like, that's all I could take out from this announcement. But very quickly going through their key predictions, they predicted that BTC will be an institutional asset and will break its 4-year cycle pattern and re-rate higher. So this is good news if you are an investor in Bitcoin and you're currently confused, feeling the jitters of a bear market. They're basically saying that the 4-year cycle is now over, and we're now in a new narrative, in a new paradigm where institutional liquidity driven by ETF inflows, driven by sovereign buyers, driven by new equity retail investors buying in Bitcoin through their products, or through Wall Street demand for structured Bitcoin is essentially going to drive prices henceforward. They also made this very interesting claim. They said that Bitcoin's volatility will be lower than Nvidia. Now, this is a very interesting claim. In fact, I should say, and I've spoken about this before in my previous videos as well, that Bitcoin today has lower volatility than 30 of the last of the 500 S&P 500 like index component companies. So we are already in that phase where Bitcoin has lower volatility in comparison to many other companies. But would it have lower volatility than Nvidia? I am not sure, because I mean, for various reasons. One, Bitcoin is an extremely reflexive asset, unlike Nvidia, which is serving a very crucial demand from AI companies, from these hyperscalers, which where their demand for AI compute is inexhaustible, at least for the next couple of years, until one of them get to AGI. And because that bet is so solid, so clear, there is no way I see that Nvidia would re-rate in a way that's more volatile than Bitcoin. I think Bitcoin still has a lot of risks. The tailless risks for Bitcoin are just too big. Many of them we saw in this cycle itself, like the M2 money supply was going higher and higher. Yet Bitcoin simply lost its correlation with that liquidity move. We also saw, a lot of manipulation on the Bitcoin chart by market makers, by some centralized exchanges in crypto, and the lack of clear market structure, bill, and cohesion, I believe, does not benefit Bitcoin. And this prediction I don't think will work out in 2026. Apart from that they made certain predictions that the passing of the Clarity Act would re-rate Sol, ETH, and BTC higher. He also made the point that ETFs will absorb 100% of the new supply. I think this is also true, and I was looking at this data point from let me find this out very quickly for you. I was looking at this data point from on I think it's right here. Yes. So I was looking at this data point on purchases by US spot crypto ETFs versus new issuances of these digital assets since they've launched. And Bitcoin, you can see that US spot ETFs have purchased 700,000 and 10,000 Bitcoin against 363,000 new issuances. So that's a 2x ratio of demand to supply, and similar figures for Ethereum and Solana as well. So I think this is very much a prediction that could work out in the end. They also mentioned Polymarket, which is the prediction market, will hit a new all-time high in volume and open interest, and it will break its 2024 prediction cycle, which brings me to the point that I believe that institutions, prediction markets, payments, these are going to be some of the biggest use cases as we move into 2026. Of course, we've seen stablecoin market cap collectively go beyond 300 billion, so it's very much possible. You can go through my entire list here, which kind of summarizes their key takeaways. My theory is yes, institutions are coming in, and yes, we are going to see that re-rating happen. But is it going to happen in 2026? Well, we'll see. In some other news, while talking about institutions, Omid Malikan, so he's one of the most prominent critics and voices about on-chain infrastructure, and he made this interesting essay. It's titled "Beware the Lofty Promises of TradFi Firms Embracing Tokenization," and basically, Omid makes the argument that while everybody is trying to take crypto mainstream, and we're seeing a lot of news that every day from companies like Visa, from JP Morgan, from Stripe, all of these large, big, centralized financial companies, they're announcing that they want to adopt crypto. But he argues that their adoption poses risks to crypto's decentralized principles as they adopt blockchain technologies to protect their own market dominance. So he's arguing basically that they would want to adopt it, but not at the cost of compromising their moat. So DTCC, which has a monopoly on U.S. securities clearing, right? Or Stripe, which has this massive dominance in payments, or J.P. Morgan, for instance, with all of its index products, with all of its banking and its lending business. Of course, they face a threat with DeFi and with the crypto's cypherpunk values. So how would these two be balanced out is something that industry leaders need to think about very clearly, because I feel, and of course this is something that I've observed as well, now working in the space in the last 5 years, that these values are slowly declining, and the CEOs of many of these companies are suo moto taking decisions without broad based consensus, conversations with token holders, with people who believed in these cypherpunk values on new open banking system, which basically disrupts these incumbents who are able to manipulate market at will. So it's an interesting take and argument. I do believe that eventually these TradFi folks are going to come in, but I would certainly hope and I want this reality to happen, that they're welcome to come in. But at the same time, the other side of a piece of the innovation puzzle, where we see a lot of these crypto native solutions, decentralized finance, it should also find its way into the mainstream. And this should not happen in a way that these large companies become the gatekeepers and essentially glut all of the innovation that has happened in the space in the last 10 years. So I'll leave it at that, and I'll leave it to your good judgment to figure whether this is net good or net bad for crypto. In other news, I found this very interesting, post by Regan Bosman. Regan Bosman is part of Lattice Fund, which is a venture capital fund, and they've created a platform called fundraise.fun, which basically tracks data of all crypto fundraisers. And what this report basically shows is very quickly how crypto fundraising, venture capital funding happened in the crypto space in the last 2025, in the year 2025, and which sectors received most amount of capital, which like sub-segment of companies got the most amount of capital, and yada yada. But very quickly, I won't go through the entire post, but 5 companies basically received a third of all of the capital that was committed. And we saw in 2025, $22 billion was committed in combined across all these deals. So a third of that would be approximately $7 billion. So $7 billion just went to 5 companies, guys, and these are the 5 companies. Polymarket received $2.2 billion, which is in the prediction market space. Binance raised $2 billion, which is a centralized exchange. Kalshi, again, prediction market, $1.5 billion. Marathon Digital Holding received almost $1 billion, and Kraken raised $700 million across 2 rounds. And they basically, and you can also already see that the majority of funding essentially went into late stage companies. Now I don't know if this is net good or net bad, because I feel like if more money kind of goes into late stage companies, which is what exactly this chart shows, that 57% of the announced rounds in 2025 were pre-seed and seed, their lowest share since 2020. So where we continue to see that there is a consolidation happening, where capital is flowing into later stage fundraising rounds, and pre-seed and seed are receiving smaller portion of these rounds. His point of view is that this is likely a healthy sign of a maturing industry. My point of view here is that it's I think a mixed bag, because unless you keep funding early stage ventures with outsized bets, and remember, crypto is still very very small. It's a niche industry, and it's still very very early. So yes, some of these players do require capital to kind of go more mainstream, like Polymarket and Kalshi has definitely proved in 2025 that prediction markets has a use case beyond crypto, and they're expanding in that regard. But I do feel there's a lot of white space in terms, if we are creating a new industry which is going to disrupt banking, if it's going to disrupt finance, then it's very important that early stage companies also get their due. And then he put out this post where he said that the clear breakout category of 2025 was payments, and payment companies raised the second largest average seed rounds at 7.7 million, and also the largest Series A rounds at 42 million. And this was largely dominated by Stripe's acquisition of Bridge, which kind of opened the doors of, hey, payments is actually a thing. And this has now driven a lot of interest in this space. So interesting numbers overall. Overall, if you look at the deal flow, if you look at the funding overall since 2018, since they've been tracking this data, 21 and 22, of course, had crazy numbers in terms of venture funding, and since then it has dropped heavily. But since 23, which was the worst of the bear market, we've seen venture funding actually grow pretty much in line with the growth of Bitcoin overall. Because if you look at the Bitcoin chart, and I zoom out for a second, right, you can see here, right here, that 2023 is when we broke off from late 22, early 23 is when the chart started breaking off, and we created this new all-time high, all the way rising from 15,000 to 125,000 at cycle top in Q4 this year. Anyhow, going back now, I feel like there is there is going to be more and more centralization, especially when it comes to venture funding. We're going to see a few company kind of take away a lot of capital, and that's pretty natural as the space grows. But I do hope that innovation continues to happen in early stage. Okay, coming to Bitcoin, guys. Earlier today, this happened. We saw these two like really large volume candles taking the price from 87 to breaching 90K, which has been a key level that we've been watching for the last couple of weeks. And then we had these tremendous, red candles eating away this gain. And what happened is, as a result of this, almost $300 million of longs and shorts were wiped off. So once again, guys, this is not normal. This is not normal trading, and this cannot happen without centralized exchanges, market makers, the Wintermutes, the Binances of the world, not manipulating the chart. So this is a clear case of manipulation, and because this manipulation is happening, once again, you can see right here we have a double top here. So I'm again expecting the price to go down. So there is this constant sell pressure on Bitcoin, and until we have this sell pressure on Bitcoin kind of easing through, I think there is more pain ahead. And so this is not a market to take a directional bet. Although if you are a long-term investor and you're looking at allocation from a broader portfolio thesis, then I would suggest that you should not even care about these things, because just buying spot, DCing in every month a part of your salary, and just buying on the dips and buying on the rises would just even out your portfolio. Although I believe that the next year is actually going to provide us a great buying opportunity, and I'll talk about that in a sec. And this is why I think it's going to happen. So this is a chart which basically goes back to 1926, and it shows how the S&P 500 has seen an average drawdown, or basically a correction on the downside of 18% in the 12 months before the midterm elections. So we are now 12 months into the midterms as we move into 2026, and every time this happens, we've seen the S&P 500 see a correction. Looking at where the S&P 500 chart is, I definitely see something like that happening, because almost every asset class is bloated. And again, also the Bitcoin chart. If you remember, in my previous video, I was showcasing these numbers to you. Like, if you look at this chart right now, every time, right, in every previous cycle, and if you go all the way back from 20, and I showed this in my previous video. So 2016, right here, we saw a correction. 2018 we saw a correction, 2022 we saw a correction, 2026 we saw a correction, and all of these were midterm years. And in each of the midterm years, we've seen Bitcoin see at least 35 to 40% correction. Sorry, a 75 to 80% correction. So because it's a larger asset, I think we're not going to see that kind of a correction. But I really believe and strongly feel, at least if the past data is true, that we are going to see at least a 40 to 50% move. And if that move happens, we're definitely going to see some correction on this part, right? But not all is bad. There were some good, interesting stories as well. Like this chart from bar chart, it shows that Bitcoin whales have purchased $23 billion worth of Bitcoin over the last 30 days, the largest monthly purchase in the last 13 years. So I think a lot of these like big hands, folks who've been dumping Bitcoin for the longest time have started buying again, which is a good thing. It shows confidence in the asset. Then there was this chart, which kind of intrigued me a bit, and I'm not going to go through the entire post, but basically the analyst argues that every time the Bitcoin's RSI is in oversold territory, which is below 30. The average market path following the last 5 times Bitcoin's RSI broke below 30 is what this chart captures. And you can see every time this happened, it's very strongly correlated to how the price has moved, and this is how it moves over the next 80 days, right? So according to this chart, the analyst is arguing that 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 the price of Bitcoin would essentially go towards 180,000. And he says that in this world, if you believe this chart, then you should believe that the 4-year cycle was never about halving, and that the 4-year cycle is in fact dead, and that we're going to see something like this, because this is kind of more attuned to how Bitcoin will respond. So I don't know if this is how it will pay out, but if you think this is something interesting, it actually tells a different story than what I was telling you about midterm elections, and in fact prices move up. But 100 years of history against what 10 years of a chart, very hard to make that argument. Finally, guys, some other stories around Bitcoin. Adam Back, one of the big voices, one of the big KOLs in the Bitcoin ecosystem, he came out and said that pro tip for quantum FUD promoters, that Bitcoin does not use encryption. Get your basics right, or it's a Dell. So basically, he's trying to address this conversation that's been happening in crypto in the last couple of weeks, that quantum computers, especially Shor's algorithm, can get to a point where it should be able to break into the ECDSA signature scheme, which basically protects the private keys from exposure. And the argument is that a strong enough quantum algorithm, at some point in time, once we get to Q day, which is basically you have millions and millions of qubits into production, we should be able to work backwards from a public address of unspent Bitcoin transactions, especially with the older versions, the Satoshi's wallet, and we can work backwards to unencrypted and basically withdraw his Bitcoin. So he's saying that Bitcoin does not use encryption. I think he's partly right on the design side, but there are critics who do argue that this is a real threat and something that needs to be addressed. And the community has been also discussing about this, and I'll leave it here. Interesting inflation data came out today from the US, and it has now trended lower. In fact, it is 40 basis points below the target reference rate, the target range of 3%, which is what everybody was predicting, in the market. And this is actually the closest it has been to the Fed's 2% target rate. And this is good. And if you remember, the unemployment rate, the non-farm payroll data also came out yesterday. And while that was ticking slightly up, it is good that despite all of the tariff, concerns that we've been facing in the last couple of weeks, we've finally been able to get into a period of time where inflation is actually easing. Because if inflation is easing, it actually creates the fertile ground for the Fed to step in, start cutting rates. And, of course, President Trump has been talking about bringing the rate down to a single percentage point. Now, I don't know if that's going to happen, but clearly he has eyes on the Federal Reserve, and he wants to put his own man into the Federal Reserve chairman position so he can do his bidding. So if that does happen, then we could probably see 100-year history of the midterm elections basically completely changing, as new money is printed en masse, which kind of drives valuations for all risk-on assets, right? Finally, guys, of course, Thomas Lee, the executive chairman of Bitmine, he said that this is a massive undershoot on inflation, and because of this, he sees a positive year-end rally around equities and, of course, crypto and Bitcoin. In some other news, guys, I came across this post yesterday, and I was thinking that I should bring this up to your attention. Basically, the New York, the Southern District of New York, which is basically, fighting a legal case and building a legal case against Pump Fun, the launchpad, the meme coin launchpad, Solana Foundation, and have basically are accusing Pump Fun of running, unregistered gambling, and they're basically accusing Solana Foundation, and Solana's key leadership figures such as Anatoly, who's the co-founder, Raj, who's also a co-founder, and Solana Foundation's president Lily Lu, that they work in closed cohort, right? The complaint accuses that the defendants of forming a criminal enterprise referred to as the Pump Enterprise, allegedly, basically duping investors of up to $5.5 billion, guys. So I think this is a big case, and I don't know, whichever way it goes, Solana is currently trying to position itself as the next institutional chain, as the next payments chain, and this is not good for them. So I think this is definitely going to have some kind of a negative impact on Solana's price, at least in the short term. And if this doesn't go well for them, this is essentially going to be extremely troubling, because I think the case does have some teeth, because a key escalation occurred in September when the plaintiffs obtained more than 5,000 internal chat messages from a confidential informant. So there's probably an insider in Solana. And according to court filings, these logs allegedly document direct communication between Solana engineers and pump fund personnel, right? So the discussions reportedly cover token program behavior, validator mechanics, priority inclusion paths, and launch flow design, basically making it easy for Pump to basically run this criminal enterprise, right? So this is essentially going to be um, extremely dampening if this happens, guys. So keep an eye, guys. Interesting story, developing story. There was one more story that came out. I think it came out 1 or 2 days back, where Solana was also under a sustained DDoS attack for the past week, and it peaked to 6 terabytes per second, the fourth largest attack ever recorded on any distributed system. And during this entire phase, the network showed no impact with sub-second confirmations and stable slot latency, which should show us that Solana has come in a long way from a network where we used to see massive failed transactions. Always everything goes through, and despite a DDoS attack, they have fairly survived. Finally, this is a chart, and it's a philosophical conversation around crypto, guys, where basically Denom is sharing the chart of Lido. And those of you who don't know what Lido is a liquid staking protocol which secures $25 billion of Ethereum. Basically, all of this Ethereum is staked through the Lido protocol, which is participating in the proof of stake consensus mechanism to secure the Ethereum blockchain. And he says that the project is making $75 million a year and is trading at a market cap of less than 500 million. Now, I've said this before and I'll say it again, that fundamentals and real prices of many of these crypto assets are completely broken. There are many DeFi protocols out there which are making real revenue, and they are consistently generating value. Their AUMs, their TVLs are on the rise, but their market price just simply doesn't justify them. And this is only possible because right now there's a lot of crime in this space. There's a lot of manipulation in the space. So once we have market structure coming in, I think that is one of the predictions from Bitwise that I actually agree with, because once you have market structure, once you have clarity on these things, on the participants, and they're held accountable, I think we're going to see a reduction in these or those crimes. But I am still skeptical, because this one has nothing to do with crypto, but this shows Nancy Pelosi has absolutely destroyed the Oracle of Omaha, Warren Buffett, in the stock market since 2012, right? So her portfolio performance since 2012, guys, as you can see on this chart, has absolutely skyrocketed. And she has beaten one of the most prolific, one of the most smartest people that I have come across in my life. And this is 900% returns in, since 2012, guys. So think about it. We talk about how TradFi has all of these quote unquote rules and regulations, and they're better than us. But look at how insider trading and manipulation and people in power basically use their positions to subvent the market. So it was a rather long video, guys, but I hope you enjoyed it. I think crypto is definitely going through this inflection point right now. And I also feel like 2026 is going to see a rise of prediction markets. I do think now that with equities coming on chain, we're going to see more and more of these crypto companies actually issuing equity on chain instead of their own tokens. This is now an active conversation, especially after Circle, the company behind USDC stablecoin, acquiring Axelar and the IP basically the team and the IP of that protocol without actually acquiring the AXL tokens, and so the token holders did not make any money. So I do think that those changes are coming, but I hope you enjoyed this video, guys, and I'll see you again. Interesting times we live ahead. I am still cautious and still sitting on the sidelines, but definitely 2026 shows us that institutional adoption is basically going to drive much of what happens in crypto. That's it from my side, guys. Trade safe and sayonara.